Hello everyone and welcome to Hacked.com's weekly webinar series. My name is Sam Borgi, Chief Editor at Hacked. It is around 9:25 a.m. Eastern Standard Time on May the 19th. As you all know, every week we like to give you a brief recap of the major market moving events of the past 7 days, looking of course at the cryptocurrency market, Bitcoin and the altcoins, as well as the broader financial markets. We saw quite a bit of movement this week, quite a bit of volatility in the cryptocurrency market. We didn't see the pop that we were expecting given the Consensus 2018 event that took place in New York, widely regarded as the biggest blockchain event of the year. We didn't really see much positive action after the event took place. However, if you take a look at the news around cryptocurrency, it's perhaps never been better. So over the course of this next 10 minutes or so, we just want to give you a recap of the market moving events and how they may influence your portfolio as we move forward. The agenda is nice and simple. We want to give you a week in review of the major moving events that perhaps influenced the crypto sphere as well as stocks, commodities, and so on. We want to look at the global cryptocurrency market. We want to give you a recap of what's going on Hack.com and what to watch for next week. So cryptocurrencies failed to rally for a second consecutive week. At one point, we bottomed at around $361 billion. I believe it was Friday. It could have been Thursday, depending on your time zone. But we are seeing 2 consecutive weeks of declines after 4 straight weeks of huge gains. At the time of writing, the cryptocurrency market had, I would say, balanced at around $380 billion. So if you look at it from a week-to-week perspective, only a loss of about $10 billion, which was much better than the previous pace had suggested. The market did peak at around $411 billion earlier in the week as the Consensus 2018 event began. If you look at the price action over the past 7 days, there wasn't a lot of huge movers, except perhaps for Bitcoin Cash. If we're looking purely at the top 10 or the top cryptocurrencies, Bitcoin Cash was the biggest mover. It saw the biggest percentage decline. I believe it fell 14% on a week-to-week basis in the wake of a hard fork where the block size for BCH was increased to 32 megabyte from 8 megabyte. So that was a big news item this week. We saw a huge pullback in Bitcoin Cash following that event. The Consensus 2018, everyone's been talking about it. Over 7,000 people attended a major blockchain event in New York. You had policymakers, you had academics, you had industry people from all corners of the crypto world. This event, as we wrote about it this week on Hacked, usually generates huge gains for the cryptocurrency market. So if you take a look at, for example, Bitcoin, Bitcoin gained between, I think it was 10% and 69% over the past 3 years during Consensus. But in the 2 months after Consensus, the market surged like a ridiculous amount. So we didn't see the Consensus surge that we are used to seeing, but typically the post-Consensus gains, the gains after the event, take place up to 2 months, after the event concludes. So we may still see some positive speculation following the event, which could lead prices higher. That would be the historical precedent that we've seen in 2017, 2016, and 2015. So I would keep our eye on that. The Consensus is over, but I'm sure many more people are going to be talking about it moving forward. Lots of positive developments in the cryptocurrency market as these bullet points clearly show. We saw Coinbase launch 4 new services or 4 new products targeting institutional investors. They believe they can unlock about $10 billion worth of institutional money that is currently sitting on the sidelines. According to Coinbase, institutional demand will drive the next leg of the crypto market rally. Obviously, last year the gains were driven mostly by the retail investor. They believe moving forward that the institutional investor could be the center or the major catalyst of the rally. We saw a bank in Japan, actually one of the top 5 banks in the world by assets, Mitsubishi UFJ, is planning to launch its own or trial its own cryptocurrency as early as next year. So again, institutional adoption is growing. We saw IBM partnering with Iridium Labs to launch a new carbon credits token on the Stellar network. That was another big news item this week, showing the interplay between tech and fintech around carbon credits and how to monetize carbon credits and how to, acknowledge them and account for them. We haven't had a foolproof system yet, but it seems like the work being done by IBM and Iridium to tokenize these credits is gaining steam. Goldman-backed Circle, which is a startup worth about $3 billion, is also planning to launch its own dollar-backed cryptocurrency. You can call it a stable coin, but the main thrust of the new coin, it's called USD coin, simply to make cryptocurrency more transaction-friendly and more user-friendly. Essentially, every USD coin that you possess has to be backed by an equivalent US dollar. Again, we covered that on Hacked extensively this week. We also saw a new study quantifying Bitcoin mining energy consumption, and the results were pretty scary for a lot of the environmentalists who extrapolated from the data. The study showed that Bitcoin mining uses 2.6 GW of power, which is equivalent to the entire usage of Ireland. So that's a huge gigawatt usage. We expect, based on the study, gigawatt usage to rise to 7.7 this year, which is above and beyond where we are now. So a lot of concerns about the environmental footprint of Bitcoin through mining and what this could mean about the sustainability of the future of cryptocurrency. As you know, China dismantled cryptocurrency mining this year, but a lot of other countries are opening their doors to the practice, promoting their energy infrastructure. I know Canada, a country that I'm in, has been involved in those discussions. We have a lot of land, a lot of hydropower, a lot of really frigid temperatures that could become a viable stomping ground for miners. A lot of other countries, or I should say at least a decent sized handful of countries, have also put forward the idea of becoming a mining hub for the crypto industry. A very interesting topic to keep your pulse on. This chart demonstrates Bitcoin's price action over the past month. We saw the peak around a few weeks ago in early May, and since then we've been in a steep decline. The market briefly touched a low below $8,000 earlier in the week, or it was either Thursday or Friday, but we have since recovered to around 82.64 based on the last time I checked the charts. And the global cryptocurrency market looks like this. We peaked at around 411 billion earlier in the week. We bottomed at around 361 billion, and we are now at around 379 to 380 billion dollars for the total crypto market cap. So that was cryptocurrencies. Looking at stocks, we did see the major equity markets in the U.S. struggle for direction, with the S&P and the Dow drifting slightly lower amid geopolitical risks. As you know, South Korea, new standoff with the North over military drills with the U.S. North Korea has threatened to pull out of talks with the U.S. next month over the drills. Last news headlines I checked, Trump had actually ordered that the drills not go on in order to facilitate the meeting next month and not to anger North Korea ahead of the talks. We're obviously watching rising bond yields. The yield on the 10-year U.S. Treasury, which is the benchmark, peaked above 3.1% this week, the highest since 2011. The yield on the 10-year Treasury actually rose something like 14 basis points this week. So obviously investors are doubling down on their expectations that the Federal Reserve will raise interest rates to tame inflation. So that could definitely be a major sticking point for investors moving forward, and that's definitely going to influence stocks. Conventional wisdom shows that this is going to be a negative for the equity markets. I guess we'll find out as time goes on. Obviously, the Fed is expected to raise rates again next month. The US dollar this week rose to its highest level in 5 months. The dollar actually began 2018. It was one of its worst starts in decades, but now it's actually returned close to 2% for the year. Monster gains for the dollar over the past 4 or 5 weeks. So that's something to keep in mind. Corporate earnings continue to trickle in, but the bulk of the earnings season is over. U.S. corporations are on track for their best quarter of gains since Q3 2010, after 93% of S&P 500 companies report. So, to give you a little bit of information about Hacked, as you know, Hacked is your #1 resource for cryptocurrency analysis, trading recommendations, as well as ICO analysis. So we covered a number of ICOs this week, including Quark Chain, which was a big one. Quark Chain got a very, very good review by our analysts. We talked it over. It seems like the project is worthy of the review that we gave it. The score that we gave it, a very rare high score on the ICO side on Hacked. We covered PharmaTrust, Definity, and several other articles in the ICO sphere. The most read articles of the week, lots of eyeballs are on the Indian rupee. We saw a trade recommendation between the Canadian dollar and the Indian rupee. We also saw a great piece on extrapolating the Federal Reserve's recent analysis of the Bitcoin crash. A great article that caught steam again this week. ICO analysis of Quark Chain was in the top 5, as well as a strange case of Bytecoin, an article I wrote earlier in the week about Bytecoin's very strange price movement as of late. And the final piece in the top 5 is a new dawn for cryptocurrencies that was released early on in the week. So looking ahead, we are obviously monitoring the cryptocurrency market. Will we see a bounce, or is this the beginning of a broader downtrend? Will we see the post-consensus rally? As I mentioned earlier, the data show the post-consensus rally typically continues for 2 months after the event, so we're keeping our eye on that. Institutional adoption, we saw Goldman Sachs, we saw the huge Japanese bank now trialing cryptocurrency. Keep your eye on institutional adoption. More institutions, banks, hedge funds are getting into crypto. We also want to evaluate Bitcoin Cash after the hard fork. And we're expecting a steady stream of economic data over the next week, US, Europe, and so on. That covers it, everyone. Thank you for joining us this week. Hope it's informative. Let us know if you have any questions or comments. Subscribe to the video if you like it. Visit us at hack.com. Email me anytime, and we'll chat later. Take care.